everyone, welcome to another episode of the Mizuho Week Ahead. I am Jingyi, market economist at Mizuho Bank. The theme for the upcoming week is Tentative. Minutes published by the Fed, ECB and RBA last week further affirmed that the future policy trajectories are tentative at best. Details in FOMC minutes confirmed the dovish leanings in the hawkish dot plot shift in June, namely that trimming policy trajectory to one cut from 3 in March dot plot instead of 2 was a close call to make. While data dependency remains a key factor, it is notable that markets are pricing in 2 cuts at this juncture. This is especially after the decline in yields last Friday on the 2-month 111 net payroll downward revision, suggesting a cooling labor market, even as June's NFP surprised to the upside. Meanwhile, ECB minutes revealed some dissenting voices behind the June cut. In particular, some members noted that stronger wage growth and stickier inflation since the prior meeting was not particularly convincing that disinflation was making progress. Accordingly, rate cuts was not fully in line with the principle of data dependence, and there was a case for keeping interest rates unchanged. This could forewarn that the next cut may not be as forthcoming should disinflation remain bumpy. Down under, while RBA minutes cleared some air, that the bar for a hike still appears high. Any cuts look to be far out in the horizon. In particular, the minutes was inconclusive on the drivers behind the upwardly revised consumption, noted that the hike may require much tighter labor market conditions, and did not view some spare capacity as necessary to bring back inflation. Even as last week showed a surge in building approvals to 5.5% from 1.9% in April, as well as higher retail sales, rentals remained high, while the increase in retail sales was on the back of sales and discounts campaigns. Over in Philippines, despite BSP signaling the possibility of an August cut at the last 2 meetings, this prospect remains tentative as moderating inflation print in June belie a further acceleration of food prices, which is the strongest driver of inflation in the country. In contrast, policy adjustments by SBV remains on the table on a pressured Vietnamese dong near the top of SBV's trading range, even as inflation remains contained and Q2 growth outperformed, registering at 6.9% versus expectations of 6.0%. Looking into the week ahead, while BOK is expected to hold rates, the central bank could plot out conditional trajectories for policy pivot, with disinflation trajectory remain on track and given that upside growth risks are mostly externally driven. But prudence would likely be a key theme insofar as further warned weakness on premature cuts risk fueling price pressures. BNM looks on cost to stand pat amid improved growth outlook while inflation remains manageable. It could be the outlier abstaining from the global easing cycle given the relatively less cumulative hikes. While the diesel and likely forthcoming fuel subsidy reduction would add to the headline number, PM Anwar had previously assured that the subsidy rationalization may not excessively burden the majority of the consumers on accompanying handouts. All in, even as headline US CPI may continue to show moderation this week, Asia FX remains tentative about outright gains, with the won and Aussie being stark contrasting representatives across the whole spectrum. With that, we have come to the end of the video. For more information on the key events for the upcoming week, please refer to our Week Ahead publication or contact your respective sales desks and RMs. And for regular notifications on our market views, please subscribe to our channel and hit the notification button. Thank you and bye-bye.